So welcome back to the Rogue Trader podcast. We're joined today by Jason Sen. So Jason, as you know, is an expert on the markets. So we're going to be talking all things gold again today. So a little bit of a historical look at back something that happened 25, 26 years ago now. I'll talk about that a little bit and just see how gold has reacted since that point. It's been on a serious bull market since that time. And then we'll look to give you some more current information as Jason is looking at the markets and the charts and where gold is going to go next. Gold is enjoying some immense volatility. It's moving very, very quickly on a daily basis. Very easy to get caught the wrong side of it, and we'll hopefully give you a little bit of an insight there. But the period I want to talk about is 1999 to 2002. I think I'm always regarded as making some bad trades over the years, and so I take that one fully on the chin, and there were a good number of them as well. But probably the most spectacular gold trade of all time was made by Gordon Brown, who was the Chancellor of the Exchequer back in that period, and he sold something like 495 ounces of gold at an average price of $288 per ounce. That's right, $288 per ounce. Right now, we're trading around the 3,120 level. I was joking with Jason before we came online here. I had to pop out a few minutes ago. The price of gold was trading at 3,126. I came back 8 minutes later and gold is trading at 3,117. So it's moving quick. And it's important, as always, I suppose, that you have your stops and your controls in place to make sure that you're safe when you're trading this. But Jason, if you can remember back to that period, 99 to 2002, and Gordon Brown dumping almost half of the UK's gold assets onto the market at that time. I think you were trading short sterling or something at the time, and it was around that whole sort of period where sterling was having some fantastic moves as well.
Yeah, crazy times. I still joke about that, Gordon Brown selling gold at those prices. But you said to me just before we went on air that they announced it or something. What did you tell me about the Bank of England?
Yeah, that was so. I was reading up something on it this morning. So they gave the markets about a week's notice that they were going to do this. So if you could front run anything, this was just perfect. So the sale, it's telling me, was announced in May 1999, which caused an immediate $10 drop in the price of gold, where everybody's selling it. And then they're buying it back, of course, when Gordon Brown is looking to sell those 495 ounces. But I think you've got a chart which shows what happened then, or where the market went to then and where it is now.
Well, what a dream for a trader for the Bank of England to tell you that they're going to sell. It's just absurd. Actually, before I put the chart up, it reminds me because when you had your big incident in Singapore, it was in the Sunday Times newspaper, and I remember reading about it, and that was the first I knew about it because obviously I wasn't in communication with you. And then, of course, the Bank of England have announced that they've got X amount of Nikkei futures to sell or whatever the hell they had to do. So everyone on the live floor, we were all in at, normally you stroll in at 7:45. Everyone was there at 7:00. It was a big event. Yeah. We knew that they were going to be liquidating positions that they'd basically published in the Sunday Times. So again, Bank of England telegraphing what they're going to do, and of course, it was licensed to steal for us.
Yeah. Just on that point, whilst you're touching on it, when I was in prison in Germany, I read through things like the Border Banking Supervision Report, the Singaporean Inspector's Report as well, and the amount of money that's attributed is £862 million. But if you read through those in a bit of granular detail, and I had nothing else to do at the time, there was actually a foreign exchange loss of 90 million over that period, whilst they were hedging the trades or getting out of the Nikkei 225. So there was no hedge. And I think Goldman's were probably the bank that benefited most out of that at the time, because I've met some of the Goldman's traders, and it was, as it was in this case where we're talking about the gold and what Gordon Brown was doing and the telegraphing of the fact he was doing that. You give Goldman's or somebody 100,000 futures that they've got to unwind, and there's no FX hedge against it. They're gonna take your pants down, aren't they?
It's their job.
It's their job.
If they didn't take your pants down, someone would be in trouble.
Well, whilst we're on the subject of pants and whatever else, and this is a pants trade, there's going to be lots of pants jokes now. But this trade that we're going to look at is now called Brown's bottom. So
nice link. I like that. Shall I get the chart up?
Yeah, if you can.
Okay, here we go. Right. Okay, so this is a gold chart going all the way back to, well, where I put my cursor right now. Actually, look, that's quality, because I'm pretty sure that's the 31st that's the August 1999.
Yeah.
Now, I do love a Fibonacci retracement, so I'm going to stick that on right now. That is the low point at which the gold reserves were sold, a lot of them.
Yeah.
I believe 255.7 was the low. And look, I probably need to zoom in here, actually. But this is really interesting because, give me a sec. I want to show you the candle that followed the sale.
Right.
Can you see that big green big green candle there? I'm going to move it along so it's in the center of the screen. The market then rocketed from 253 up to 327 the following month.
Wow.
There's a hell of a jump.
So this is a case of, we're going to tell you that we're going to sell this. We want you to take advantage as much as you possibly can, and then the market's going to do what we want after that. After you finish.
Yeah, exactly. Crazy. Well, imagine if you had bought at $255 and held it, you'd have been doing all right.
Yeah, it almost looks like a Bitcoin chart in the type of move that you've had since that sort of time. Anyway.
Yeah, this is getting a bit. This is a heck of a move up here now, isn't it?
Yeah.
Exponential, I think they call that, don't they? But look at this last month. I mean, we've really soared. So I don't know. I'm not going to pick a top, but that certainly is accelerating.
Well, it was funny. You say you're not going to pick a top, but there was a guy, and I saw you commented on it one day during the week, and he did pick a top, but it was the top for that day. And I think that's the issue that everybody's having when they look at this. It's just, it is quite unbelievable how fast it's moving exponentially, as you say. But I think the top that somebody picked out, and they gave a name to it as well, which you'll probably understand, I definitely don't, or there was a phrase associated with it, but it was around that 3,079.80 level. And it did retrace from there, but it was very temporary. I think it moved back from there a couple of times, and that's the issue. It just seems to be moving so quick, so moving through levels, as we spoke about last time, really easily. And the trade tariff issue that we're facing at the moment with Trump, which is today, they're going to be announced today, and they're not going to be announced today, but they're going to take force today. But he's already backtracking a little bit and saying that he is open to negotiations with certain countries over it. So gold could be up and down like a pair of knickers, I suppose, was keeping with the theme of today's talk over the next couple of days. So where do you see gold? Where do you see gold at the moment, Jason?
Okay, let's have a look. 4-hour chart coming up. There you go. There's my fib lines and everything else. You can see this trend line. Actually, I think you talked about 3080, and I can tell you exactly why we stalled at 3080. And I think I actually talked about that the last time we were looking at gold. There. Now that trend line is almost, let me see now if I can get a reading. Yeah, that was around 3080. And we did back away. Look, 1, 2, 3, 4 bars on the hourly chart anyway, on the 4-hour chart, which show that the market was really stalling. And even this candle here indicate, and I thought, wait, hang on a sec, we're going to get a small correction with this, but we didn't. The next candle, green, rocketed through, and look how beautifully that trend line is now support level.
Yeah,
we're just bouncing off it. I'll give you the current value of that trend line. It's around 3108, 3106, should we call it? So that's the support level to watch for now. Hold above there, And I think I've got some new. What are my targets now? Just give me a sec. I've got 31.63 to 31.65, and I've got 31.72 to 31.74 as my next upside targets. Not that ambitious, really, is it? When, as you say, the market's moving $10 in a heartbeat.
Well, it could touch those levels today, really, depending on what's going to happen with these tariffs, what Trump is going to say, and where we go from this point. So look, that's, I think it's bounced nicely off that 31.02, 31.03 level a couple of times when it's gone down and tested that. So
I'll
let's
give you another level.
Well,
If we go further, I should share this chart again, actually, so that I can really make it clear.
Okay.
Here we go. So just simply this trend line down, this trend line up here has worked so well. This lower trend line comes in at around just below 30.80. So I'm going to call it, by the time we get there, it'll be around 30.80, 30.75. So if we were to fall that far, that should be a good support level.
Okay. All right. So what support around 30.80, and your target's around 31.60 for gold going forward.
Yep.
And I've got like me, just not even looking at the charts or whatever, I've got an idea that we'll probably hit one of those this week. It's been that crazy over the last number of weeks that there is a big move. I mean, you mentioned the word correction, a correction or a consolidate, correction more so, but corrections are healthy. It gives people a chance to get back into the market, consolidate and move forward from there, and provide that base to move on.
Yeah, I always think of it as the market taking a few steps back for another run up through the previous all-time high. You know, you need the pullbacks to keep going. And of course, we've got non-farm payroll, average earnings, and unemployment on Friday. Normally the biggest event of the week, but I think overshadowed by the Trump tariffs, as you said. But still, could be a market mover even for gold.
Lovely. Thank you very much for joining us, Jason. As always, if you get the chance to follow us on follow the podcast on YouTube, and subscribe. Jason's details are on the screen as well. And as always, the targets, the support levels are always very, very good. So we encourage you to follow anything that Jason's doing as well. Thank you very much, and we'll see you again soon.